Now, whether or not you're new to dividend investing or you're just looking for some of the highest quality, best dividend growth style ETFs to grow your portfolio as fast as possible, as safe as possible, I think it's very important to know a short list of some of the highest quality dividend growth style ETFs across the market as of right now. So in this specific video, we're going to go over exactly that, and I'm going to share with you which 5 dividend growth style ETFs across the entire market I think are the potential best options as far as dividend growth style ETFs that have a history of paying dividends, raising dividends, and altogether just growing consistently over time. So if you consider yourself a dividend investor, make sure to stick around, drop a like down below, and let's get right into the first one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the first ultra high quality dividend growth style ETF that's not only going to grow your portfolio over time, but also, at least based off of historical data, is going to pay you more and more dividend income also, is ticker symbol VIG, or the Vanguard Dividend Appreciation ETF, one of my new favorite dividend growth ETFs that I've been adding to my portfolio as of recently. Now, VIG has a very cheap expense ratio of just 0.06% and has a pretty straightforward product summary. It says to seek to track the performance of the S&P US Dividend Growers Index, passively managed full application approach, remains fully invested in large cap equity, emphasizing stocks with a record of growing their dividends year over year. Now, VIG has around 337 different holdings, and some of the top holdings being very familiar names, things like Apple, we got Broadcom, Microsoft, JP Morgan, United Health Group, ExxonMobil, Visa, Procter & Gamble, Johnson & Johnson, and MasterCard. Now, across all the different dividend growth style ETFs I'm going to go through in this video, you're definitely going to see some overlap because some of these ETFs do hold some of the same names. But to look a little bit deeper into ticker symbol VIG, over the max time frame, this ETF is up around 289%, and this is not even including dividends. And speaking of dividends, VIG does pay a 1.7% forward yield, more or less, with a dividend that might not be the largest across the market as of right now, but over time at least has been growing significantly year after year. Now, this means, of course, even as of right now, if you start off with a 1.7% more or less yield, over time, your yield on cost will most likely go up, at least it has historically for investors. Now, all in all, because of the diversification and the performance and the holding breakdown, VIG is one of my favorites across the entire market. But as far as favorites go, this might be my number one favorite of all. The Schwab US Dividend Equity ETF is another super high quality dividend growth style ETF that could be a potential good option to look into, especially if you're a newer investor trying to build a foundation, or of course, if you're just an investor that's looking to find high quality dividend growth ETFs that are going to grow your portfolios extremely quickly, at least based off of history. The objective of SCHD is to track as closely as possible, before fees and expenses, the total return of the Dow Jones US Dividend 100 Index. It's a low cost fund, potentially tax efficient. And of course, SCHD has around 100 different holdings in this ETF, with top names being things like Lockheed Martin, BlackRock, Home Depot, abbvie, Cisco, Coca-Cola, Amgen, Verizon, Texas Instruments, and BMY. Now, if I'm not mistaken, SCHD might be the least diversified ETF across all the ones we're talking about in this video, but don't get me wrong, still 100 different stocks within an ETF gives you a lot of exposure to a lot of different areas in the markets. Now, SCHD has also performed amazing in the long term, up 231%, not including dividends. And one of my favorite aspects about SCHD is that it offers a pretty decent starting yield, around 3.35%, with, of course, massive dividend growth historically. Just like VIG, SCHD has also paid more and more in dividends long term, which again is giving investors a potential massive yield on cost if you just hold on to this one for a relatively short amount of time. Now, I've talked about this time and time again for many reasons, more than one. SCHD is one of my favorites across the entire market because I feel as if you get a nice exposure to income but also growth potential, all while doing so in a low beta and very low cost way. So as far as dividend growth goes, SCHD is probably number 1 or number 2 across the entire market, if you ask me. Another super high quality one, this is another favorite across the dividend investing community. Ticker symbol DGRO, the iShares Core Dividend Growth ETF. This is another very popular dividend growth ETF for many reasons. It says right here why DGRO. It offers low cost exposure to US stocks focused on dividend growth. Access companies that have a history of sustained dividend growth and that are broadly diversified, of course. And as far as dividend growth goes, DGRO is honestly one of the best to do it across the entire market. And this is largely because of the names within the ETF, around 417 names altogether. So you are getting some massive diversification, which I personally love by investing into DGRO. But you're getting exposed to things like Microsoft, which makes up a large portion of this ETF, things like ExxonMobil, Apple, JP Morgan, Johnson & Johnson, Chevron, abbvie, Broadcom, Procter & Gamble, and Home Depot. Again, some familiar names from some of the other dividend growth ETFs. There is going to be some overlap here. But again, as far as quality goes, which is very, very important, especially if you're a newer investor. Names like DGRO have a track record to prove the potential for some massive upside long term. And speaking of upside, since around 2014 only, DGRO is up around 152% plus dividends, of course, which DGRO offers around a 2.18% trailing 12-month dividend yield, which isn't necessarily high, but isn't necessarily tiny. Gives you a nice small amount of cash flow from day one. But just like the others also, DGRO has been raising their dividends consistently over the years, giving investors more and more income if they just hold on to this one. Now, because of the holding breakdown specifically, I think DGRO might have the potential to outperform a lot of other dividend growth style ETFs in its class over the next 10 years. And for that reason, I have to add DGRO in one of my top 5 dividend growth style ETFs across the entire market without a doubt. Another one of my favorite dividend growth ETFs, this one's a little bit less talked about, but we're talking about DGRW now, the WisdomTree US Quality Dividend Growth Fund. Now it says why DGRW gain access to the current investment landscape of US large cap dividend growing companies by applying quality and growth screens, and of course use this as a complement to a high yielding dividend strategy or replacement for large cap quality strategies. Now, as far as DGRW's holdings go, this is one of my favorite breakdowns across all the dividend growth style ETFs, all the popular ones at least, around 300 different names with a large exposure into 2 of my favorite single stocks, Microsoft and Apple, make up 7.24 and 5.17%. Then more familiar names once again like Broadcom, like abbvie, Johnson & Johnson, Nvidia, names like Home Depot, Procter & Gamble, Coca-Cola, and PepsiCo. And honestly, looking through this list of top 10 holdings, so far at least, I would probably say that these are probably going to offer the most growth potential in my opinion over the next 10 years, but what do I know, I could be wrong. But just like the others, DGRW has grown like crazy over the past 10 or so years, up around 233%, plus dividends of course, which are around a 1.52% trailing 12 month. And something cool about DGRW is that it pays its dividends out monthly, which might be advantageous or not depending on what you're looking for. For me personally, I love getting paid monthly dividends. It's just sort of a fun thing to have in the portfolio. Now with DGRW, there is still some dividend growth, not the fastest dividend growth compared to some of the other names, but DGRW has been growing as far as price return consistently and very aggressively over the past 10 or 11 years. Now for these reasons and more, this is one of my favorites and is currently in my portfolio and likely going to become a larger position in my portfolio over the next several years. Now last but not least, my last favorite highest quality dividend growth style ETF across the entire market I'm talking is VYM, the Vanguard High Dividend Yield ETF, which again is very popular for good reason. Now VYM's product summary says seek to track the performance of the FTSE High Dividend Yield Index, which measures the investment return of common stocks of companies characterized by high yield dividends. Now, VYM has around 500 different holdings within this ETF, so you're going to have a ton of exposure to a ton of names, and this is going to be the dream for those investors out there that love diversification. We're talking names like Broadcom, JP Morgan, ExxonMobil, Procter & Gamble, Johnson & Johnson, Home Depot, abbvie, Walmart, American Coca-Cola. Again, some names in here that might have a tiny bit less growth potential, but are going to be paying dividends and have been paying more and more dividends long term. But just like the others, VYM is also up around 150%. This is since around 2006, so it hasn't grown as fast as some of the others. But keep in mind, VYM pays almost a 3% trailing 12-month dividend yield, which just like the others has been growing time and time again year after year. So for those investors out there that want a little bit more exposure to some more income, VYM is going to give you a higher yield, which again could be important or not to some investors out there. But either way, VYM offers a nice mixture of growth, a ton of income, and a very diversified portfolio, which makes it one of my top 5 across the entire market. So there we have it. Those are 5 of my favorites and 5 of the most high quality, in my opinion, dividend growth style ETFs across the entire stock market, at least as of today. Now, whether you're a newer investor just getting started out, or you're just looking for a dividend growth ETF to boost your portfolio's income year after year, dividend growth style ETFs could be an amazing thing to look into. But now, last but not least, I want to ask you guys down below, what is your #1 favorite dividend growth style ETF across the entire stock market as of today? Drop the ticker symbol in my comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.